Hello and welcome back to Markets, Investments and More. The last couple of weeks have been extremely exciting for Thai investors because it has been earnings season, and by now we have results for all the top 100 listed companies here in Thailand. And this is so exciting because for the first time since the crisis started, we have a full year of uninterrupted results. So no lockdowns. We can really compare the 2023 results with pre-crisis level of 2019. In 2020, 21 and 22, we always had some levels of lockdowns during the year. So the results were always affected by this. But 2023 is basically a clean year. So what I want to do today is I want to look at the performance of the Stock Exchange of Thailand. I want to look at potential reasons why the stock market performed in the way it did. And then I want to dive into the fundamentals of the market overall, but also specifically looking at some of the companies in the Stock Exchange of Thailand. So let's dive into it. First of all, if we look at the Stock Exchange of Thailand over the past 5 years, since its all-time high in July 2019, we see that the market actually has underperformed other markets, and quite significantly so. The S&P, for example, S&P 500 in the US has grown by 74% since July 2019. In contrast, the Stock Exchange of Thailand has decreased by 20% since its all-time high in July 2019. And even if you look at a more recent period, so the period since January 2023, we see that the S&P 500 has increased by 33%, while the Stock Exchange of Thailand has decreased by almost 18% in the same period. So it doesn't look very good for the Stock Exchange of Thailand in recent years and months. So I would like to look at some of the details of why the stock market might have performed the way it has. Some of it is speculation, but of course, as always, we will look at the facts and try to create the picture through facts and figures. So, first of all, I believe there are 4 potential reasons for the sluggish stock market in Thailand. The first one is that the Thai economy has actually recovered slower than the rest of the world after the COVID-19 crisis. The second is still we see a challenging political environment and quite some uncertainties around politics here in Thailand. Then what we can observe is a net outflow of funds specifically from foreign investors. And foreign investors is the largest investor group here in Thailand. So this has a significant impact on the performance of the market. And then fourth, I would like to look at the fundamentals of SET-listed companies, specifically at the largest 100 companies in terms of market cap. I put 3 question marks there because the answer is not so clear. If this is a reason for the sluggish stock market, we will have to look at the fundamentals, which we will do later. But first, I want to look at some facts around the first 3 points here. So if you look at the economy, the Thai economy after the COVID crisis, and if you look specifically at the 2019 level of GDP output, we can see that even in 2024, with the current forecast, we are not reaching the 2019 levels yet. So economic recovery has really taken a long time and is expected to reach pre-COVID levels only in early 2025. While the world economy has actually recovered in 2021 already as a whole. So Thailand is significantly slower, and that might have an impact on the stock market here as well, and certainly on the companies in the economy. The second point is the political uncertainty. As we can see on the right side here, in the elections that happened on the 14th of May 2023, no party really got an absolute majority. So each party was, in order to govern, reliant on coalition parties. And the current government consists of an 11-party coalition. Actually, the strongest party, the Move Forward Party, is not part of the current government here in Thailand. And governing an 11-party coalition certainly is not an easy thing to do. and therefore brings some uncertainties to the Thai economy, and probably is a reason why investors, foreign investors, are careful with investing in the market. And this is also reflected in these statistics. So on this page, we can see the fund flows by type of investor over the past 5 years. So since March 2019 until March 2024. And what we can see is that there was a net outflow of 376 trillion baht out of the market from foreign investors. Local investors on the other side have bought 443 trillion baht. Local institutions actually were also quite negative and took funds out of the market, and the rest is made up by proprietary trading from brokerage firms. But whenever we see a net outflow of foreign investors, which you can see in the statistics below, represent about 43-44% of the total trade, that is always a negative sign for the Thai market. These are well-funded investors, mostly institutional investors also, and probably they see more attractive markets elsewhere and therefore withdrew their funds over the past 5 years. So these are some of the contributing factors to the sluggish stock market over the past couple of years. So now I want to look at the fundamentals of the market and see if the fundamentals actually reflect the stock market performance or vice versa or not. So first of all, just a recap, the Stock Exchange of Thailand consists of 698 stocks and has a total market cap of 16.9 trillion baht. However, if we want to look at the performance of the market, we don't have to really analyze all the almost 700 stocks. It is enough to look at the SET 100, so the 100 largest companies by market cap. The market cap here is about 13 trillion out of the almost 17 trillion. So in terms of percentage, it represents about 77% of the total market. And I think this is enough to get some kind of picture of what the market is doing overall. So the remaining almost 600 companies only represent 23% of the market cap. So for the rest of this analysis, I would like to focus on the SET 100. Specifically, when we look at the SET 100, there are only 85 companies actually that were traded in 2019 and in 2023. So as of the SET 100 companies in March 2024, 85 have comparable data between 2019 and 2023. So these are the 85 that we will look at. So looking at the market cap of these 85 companies, the market cap of these companies actually has decreased by about 6%. And at the same time, the PE ratio, the price earnings ratio, has also come down by about 9%. So in 2019, the PE was 19.16, and in March 2024, the latest number of these 85 companies, the PE is 17.39. So the stocks overall have become cheaper relative to their earnings. Now, looking at more of the fundamental data, if you look at the aggregate of the 85 companies, the revenues actually of these 85 companies combined has increased by 40%. So from 8.4 trillion to 11.8 trillion baht. At the same time, the net profit only increased by about 4%. And I think this is the first indicator on why we see some challenges in the stock market. Fundamentally, this represents a 26% drop in profit margins. So on average, the profit margins of the 85 companies in the SET 100 with comparables has decreased from 7.4% to 5.5% in 2023. Cash flow actually has developed positively in terms of operating cash flow. So operating cash flow increased slightly by 7% in 2023 compared to 2019. But the net cash flow, So the cash flow, including investments and financing expenses, has actually decreased very significantly and has turned negative in 2023. So the 85 companies combined had a negative net cash flow in the year 2023, while in 2019 the net cash flow was still positive by about the same amount. And also the debt might be a fundamental reason why the stock market is valued lower than it was before. Actually, the debt to equity ratio of the 85 companies, market cap weighted, has increased from 1.85 to 1.98, which is relatively high. And the debt level at the same time has increased from 15 trillion to 20 or 21 trillion almost. So that's an increase of the total debt by 35%, the debt in Thai baht. So these were some of the market fundamentals. So overall, we do see some challenges with the fundamentals in the Thai market. But this is the average. And I would like to look at some of the companies to see, or to try to see what the range is of these values between different companies, which companies have done better and which companies have done worse over the past years. So we go by the same fundamentals that we looked at previously. So if you look at revenue growth, we see that some companies have done phenomenally well in terms of revenue growth between 2023 and 2019. Next point, for example, which is an electronic vehicle, like an EV company that focuses on trucks, has increased their revenues by over 1,000% compared to pre-crisis. Gulf has increased by 285%. Delta, an electronics company, also has increased by almost 200%. We see some electronics companies like Com7 also doing very well. And some consumer goods companies like Sappe also managed to increase their revenues quite significantly compared to 2019. On the other end of the spectrum, we have some companies that struggled with the growth. So some companies grew slower by 4.4%, 4.3% for AIS, for example. Also Sapar, the consumer goods company, grew by 1.9%. But then we have also companies that actually shrank in total revenues. BTS, the SkyTrain operator, for example, decreased revenues in 2023 by almost or by more than 50% compared to 2019, probably driven by tourism. Same for AOT, the Airport of Thailand operator, decreased the revenues compared to 2019 by 25%. Important to say that 2019 was a very strong year of tourism, the strongest so far for the Thai economy. So 2023 tourism levels haven't reached the pre-crisis levels yet. In terms of profitability, again, some companies did phenomenally well in terms of margin improvement. The number here is the net profit margin in percentage point, or net profit margin change in percentage point. So companies like AWC, a real estate developer, a next point which we already discussed, or an education service provider like SISB, did quite well and managed to improve the net profit margin significantly compared to pre-crisis levels. While on the other end, some of the energy companies, as well as AOT, again, Airport of Thailand, decreased their profit margins by quite a significant number of percentage points. If you look at debt, some companies used the crisis and managed very well in increasing their total debt. So we have VGI, for example, the advertising company, Tasco, which is Tipco Asphalt, a basic materials company, or Bangkok chain hospitals, some hospital companies, also BH, which is Bumrungrad Hospital, all managed to decrease their total debt compared to pre-crisis, while other companies took on a significant amount of new debt. When I looked at the debt level, I found that maybe the comparison here is not entirely fair because company like NextPoint, for example, they had quite low debt levels pre-crisis. So any increase in the debt would result in a quite high percentage point increase. So this comparison here is maybe not entirely fair, but it becomes clearer if we look at the debt to equity ratio and put this in comparison. So on the left side, we see some of the companies that have done quite well, that have a very low debt to equity ratio, so almost no debt, including VGI, the advertising company, or Hana Electronics, Ishitan, the tea producer, or even Tipco Asphalt, the basic materials company. On the other hand, we see companies that have very high leverage and came out of the crisis with a high debt burden. And this includes, for example, Minor International, a hotel operator, AIS, or Erevan Hotels, which is another hotel operator who increased or have quite a high level of debt to equity ratio. Finally, looking at cash flows. So some companies actually managed to improve their cash flow compared to 2019 significantly. Thornbury Hospital Group, for example, is up there, and some other companies that have a very high percentage increase in their operating cash flow. And on the other hand, like some companies actually decreased their cash flow significantly. So when you see a decrease here of more than 100%, that means that the cash flow turned from positive to negative for these companies. So all in all, looking at the fundamentals of the market, we see a split picture. So some companies did phenomenally well through the crisis and improved their performance, used the crisis to maybe clean up their balance sheet or come out with a quite healthy balance sheet after the crisis, and some companies struggle. So net, I think the Thai economy is still in recovery, and the stock market, in my opinion, reflects that situation. It is quite reflective of the fundamentals that we see in the market. So as the economy is expected to further improve in the month and years to come, I think the Thai stock market should also pick up. For sure, this is no investment advice. So all the companies named here is based on the actual facts and figures, and is not an endorsement or a recommendation to buy or sell any of these companies, of course. Well, I hope there was some useful information in this video. Thank you so much for watching.